Hi everyone, welcome to the video lecture for Module 3 of the Food Business School capstone course. We're going to be talking about how to pitch your business here, and we'll be starting the process that we'll be heading into for the next few weeks of providing mentoring and feedback on your pitch deck so you can fine-tune it for the final presentation at the end of the course. So what are the key elements of a pitch deck? The first element that I like to see is, what is the problem you're trying to solve with your business? And here, brevity is really important. Again, we have to boil this down to its essence. What problem are you solving for your business, with your business? And whose problem is it? And why is it a problem for them? But this has to be very succinct, a few bullet points, maybe 5 at the most. We really have to drill down very quickly on what the problem is that you're solving. Then the next component of the pitch deck is a brief summary of the solution that you're providing to that problem. So problem, solution, solution, problem. We always have to link those up and be very succinct in how we connect them. What are the products or services that we're providing? And again, a very brief summary of what they are so that the listener or the viewer has a hook and has a clear sense of what it is that you're offering to your end user. A brief discussion of the founding team. We want to kind of set your bona fides here and why you are an investable team, why the investor should believe in you and your either co-founders or key management team here, and why you are an investable team in terms of what you can do and what you can build for this venture. What your competitive advantages of this business, how it sets you apart from the competition, and how this business venture is likely to succeed because of this competitive advantage. We next talk about our distribution channels, and this is more relevant for a food product business than a restaurant, but how we get our product into the market. And are we an e-commerce business? Are we a grocery retail business? Are we a combination of both? We have to set that frame so the investor understands how we're getting our product or service into the stream of commerce, into the marketplace. A brief description of the market and the brand adoption, why this brand and is going to match up with a specific market, a demographic that you identify in terms of your consumer or end user. Where the competition is. Every investor wants to know what the competition, what the competitive landscape is, so that they can measure you against the competition to get a sense for whether you're likely to succeed against them, given your product and team and your skill set and your business plan. And then what the profitability of the business is likely to be, what the gross margins are. They want to know that you've thought that through, that you have a clear target for a gross margin that will sustain the business. And finally, what is the ask? How much money do you want to raise in this round and what's the minimum investment unit or size that you're asking for from each investor? So those are the key elements that we're going to look to have addressed in every pitch deck, and we'll be working with you to fine-tune this and streamline it so your message is, again, as clear and succinct and powerful as we can make it together. So the first slide of a pitch deck is typically the one sentence that will describe what the value is that you're providing to your customer. And again, the reduction process. We can't be too wordy here. This has to have punch and impact, and we have to be able to persuade our audience that we really understand the fundamental proposition here and that value proposition, and that we've boiled it down to its essence to make it clear to them and clear to anybody we're going to be talking to as we build out this business. Slide 2, the problem. Whose problem are you solving? Is it your problem or is it someone else's problem? I'll tell you an anecdote about a company that received venture capital financing. It wasn't in food and beverage, but it was a company formed by tech entrepreneurs in San Francisco, and they lived in San Francisco in an area where a lot of tech entrepreneurs live, the Mission District. Maybe, I don't know, similar to Brooklyn and New York or some other neighborhoods in other tech-centric cities. And these entrepreneurs had a problem they wanted to solve. The problem was that they needed to feed the parking meters in their neighborhood continuously to park their cars, and they didn't have enough quarters. So they started a business selling packs of $18 worth of quarters for $20. And believe it or not, they got a venture capital firm to invest in them. The business failed because the problem that they were solving was their problem, which was not there was not a large addressable market. There was not they weren't filling a white space for a consumer need that had scaling potential. So believe it or not, the venture capital firm invested, and not surprisingly, the business failed because they were solving the problem of too few people, not a large enough market. We don't have to solve the problem that Amazon solved or Microsoft solved or Beyond Meat solved, but we have to be able to solve a problem of a substantial group of people, consumers, and we have to understand who they are. Tell a relatable story when you're defining the problem. Again, it can't be too arcane or obtuse or abstract. It has to be specific and put a narrative to it so that the audience, the investor, can relate to the problem that you're describing. The more real you make the problem, the more likely it is that the investors will be able to relate to it. The problem of selling quarters to tech entrepreneurs in the Mission District in San Francisco, that doesn't sound too real to most people that we'll be talking to as prospective investors. But you can make your problem one that they can relate to, the problem that you're addressing in your business. Slide number 3, we go to the solution. So problem, solution, solution, problem, direct linkage, and very, very succinct. So once we've set the hook with the problem, then we come up with a brief description of what the solution is. Describe how your customers will use the product or service and how it addresses their problem. So again, the direct connection between problem and solution, solution and problem. Let's explain briefly how we're coming to the rescue here with this solution and why it will be perceived to be a solution by our target market in a very compelling way. But again, we have to be very succinct about this, so boil it down. Number 4, slide number 4 is the target market and what the opportunity is. This is where the investor gets a sense of how large the market or relatively compact the market is. And then they can get their heads around what the opportunity is here for your company and for their investment. Who is your ideal customer? Again, talk about the persona of your customer and the demographic so they get a clear sense of who that person is. And what is the total market size and position of your company? Here we have to be realistic We don't want to puff. We don't want to exaggerate. Telling people this is going to be the next Microsoft is not going to do you much good in an investment presentation. Most investors in food and beverage aren't expecting anything of that scale. They just want something that is going to be a successful business and can scale over time with their capital and will likely lead to a successful exit event, which means that you can sell your business to another business or a larger company or to an investment firm that has a platform or collects or aggregates companies like yours with their investment dollars. Those are private equity firms and family offices. But again, the exit scenario is going to be important, and how you position your company to be attractive in that exit process is something investors want you to start thinking about before they write their check. How we scope and scale the problem that we're solving, again, we have to size it and figure out if it's a realistic market. We don't want to be selling quarters to tech entrepreneurs in San Francisco. We want to be solving a larger problem that has more opportunity to scale. Let's make sure we identify a very specific target market and one that you can reach. So there has to be some connection between your background, your team, the market, and how you intend to connect those dots. And investors will want you to have thought that through very carefully and to be able to present how you intend to connect those dots very cogently. Be realistic and credible. Don't overpromise. The best and most successful entrepreneurs I've worked with are entrepreneurs who underpromise and overdeliver. And keep that thought in mind. Underpromise and overdeliver. You don't want to so underpromise that the opportunity does not seem appealing to investors, but you want to set targets that are attractive to the investors, and then you want to exceed them. Slide 5 is the revenue model, the business model, and here we have to make sure that we can make the case that our business is profitable. And that's gross margin. That requires a lot of drilling down to making sure the numbers work. And there may be brief periods of time where your business is not profitable, but you have to be able to anticipate that, project out to how you're going to make the transition into profitability, and explain why the business needs to be unprofitable during that brief stage of growth in order to reach sustainable, consistent profitability. So if we can't make money on our business, we can't convince investors to write us a check. And we shouldn't be taking a check from Aunt Bessie or mom and pop unless we can make the case to ourselves before we make it to them that we have a profitable business model. What's the competitive landscape? How does our product or service compare to others in the market that our consumers or end users are going to see? We have to be able to make that case that the pricing will be competitive. And we're not going to be overpriced to the point where we're not going to be able to generate a customer base for our product. We have to identify our roadmap for building the business, who are the early adopters, how we're going to bring them in to the process, and what are the major milestones we've achieved so far before we're taking in this investment dollars, and how have we reached them? What are the next major steps we're planning to take? And how do those next major steps lead to profitability and growth? We have to be very clear and specific about what those steps are in this slide 6 of our pitch deck. We have to have a roadmap identifying the key milestones of the business, even if they're not things that we intend to do in the near term. We have to identify realistically what they are and when we're going to achieve them, looking out 12 to 18 months at a minimum. And this is where investors want to know that you've got some vision into what's coming and you've given some thought into what you need to achieve, not just in the next immediate term, but in the near to intermediate term. Anything over 3 years is probably not realistic because we don't know what things are going to look like, certainly at that point. But if we've thought through the next 12, 18, maximum 36 months and identified the key milestones, that will give the investors some comfort that we've thought this through, and they will have some ideas of how to benchmark this business if and when they invest. We need slide 7, which talks about our sales and marketing strategy. What do our sales process look like? How we're going to get the word out? How are we going to get the product into the onto the shelf or into an e-commerce platform? What are our key tactics for getting the product in front of prospective investors? And how are we thinking through what the hooks are to get in front of and to persuade the grocery retailers, the e-commerce platforms, whoever else we need to persuade, distributors, to get our product into their stream of commerce to sell for us. What sales channels we'll be using? Are we e-commerce? Are we on the shelf at grocery? Are we looking at big box stores like Target and Costco? Or are we talking about small local independent grocers? Identifying your channel or channels will be key to engaging the investor. And how will your sales and marketing process be different from your competitors? Let's think that through very carefully and be able to articulate that. Slide 8 is our team. Identify the key positions, even if you don't have them filled right now, and be able to explain why are they critical to the company's growth. Identify your key team members, both in terms of people you'll be hiring and those team members who will be outside your company. And again, some of them you'll have identified, some will just be slots that you intend to fill, but be able to explain what the team will look like when it's fully developed. And identify your specific strengths and what roles you will play as the team leader, presumably. And maybe you'll be wearing multiple hats here, and what multiple functions you will play or perform at the outset and over time. Slide 9 is our financials, simple charts, sales, total customers, expenses, profits. Again, we'll help you work through this, but it has to be simple, and it has to hold together. It has to be, you have to pressure test it. We'll help you with that. But the investors will want to see that the financial plan holds together, is tight, realistic, and achievable. We should identify our key assumptions in building this plan. Every plan has, financial plan has assumptions, and we'll need to identify what ours are. We have to identify the key expenses that are going to be incurred in this business, and what the factors are that may drive those expenses up or down. And we have to avoid what we call hockey stick projections, which says, we're starting this business with $100,000 in sales this year, and we'll be at $5 million in sales next year. That's not credible for most investors, and it will lead to some loss of attention from your audience, and certainly a lot of pushback if the projections look like they're overly optimistic and aggressive. And the last point is, are the financials based on actual experience so far, or is it all speculative going forward? So to the extent we can identify what numbers we have actually achieved, both in terms of income and expense, and how that's going to scale over time. That will lend some credibility, particularly if you have traction and are heading towards increasing sales and solid gross margins or profitability. Who's the competition is slide 10. What are the alternatives that your customers have on the market today? We have to understand that landscape and be able to explain where we sit in that landscape. What key advantages do you have over the competition, that sometimes referred to as the secret sauce? Why will you succeed in areas where they have not, or where you will succeed more than they have to this point? Both in terms of market acceptance and profitability. And why will your customers choose you instead of your competitors? Slide 11, what the investment is and the use of funds. Why are you raising this amount now? We have to be able to explain what we intend to do in the next stage of development and what the use of our funds are going to be. To what milestones do we plan to get with these funds? And usually we're talking about 12 to 18 months here. We have to try to raise enough money to get us through the next 12 to 18 months, and then we'll start again in 6 months to raise money for the next 12 to 18 months. But we have to be able to identify where we expect to be with this money that we raise now in the next 12 to 18 months in terms of market traction, customer adoption, revenue, profitability, all of the key milestones in measuring the growth and success of a business. We have to very specifically say what we'll be using this money for. And that's the use of funds. And we'll be able to put out 5 or 6 different categories that will say we're using this money to hire talent or to create more inventory. And 4 or 5 different other factors that we'll talk about as we proceed. But we want to be quite specific about what the key buckets are that we're going to be using to spend this money for in the next 12 to 18 months. If there's other current investors, we want to explain who they are. And certainly if they're investors that have a reputation in this field, or known in the food and beverage industry, that will add a certain amount of validity to your pitch. And what is your exit strategy? Again, there always has to be, even if it's not something that you plan to do near term, every investor will typically want to know what the exit is, who you're going to sell to, who's likely to buy a business like this. Of course, that target always changes and moves over time, but just having an idea initially to connect A to B, B being, A being where you are now, and B being, when you're ready to sell the business, who is it that's going to step up and write a check? That's the exit strategy that we start with the understanding that our investors want to know that we have an idea of how that's going to work, but would fully expect that that's going to change over time as the business grows and the market evolves. So let's take a pause right now, and we'll come back for the second part of this presentation, which is an actual pitch deck. And we're going to look at a specific pitch deck and go through each of the slides just so you have an example to refer to. This is not written in stone here as to what it has to look like, but I want you to have one frame of reference for what a pitch deck looks like for an early stage company that actually was successful in raising capital. So we'll take a pause here. We'll come back to finish this up when you're ready to log on again. Thanks. Hi, everyone. We're back from our short break in our Module 3 video presentation. So now we're going to go into an example of a pitch deck and go through slide by slide to give you kind of a concrete reference point. And again, this is not necessarily a template or something that you must follow, but I wanted you to have a frame of reference of what a pitch deck looks like for early stage food product companies. This is not a restaurant venture, it's a food product company, but it'll give you a sense of what a well-organized presentation looks like for prospective investors. So this company sells organic Latin spices and foods, and it's a startup, one person coming out of the food industry, another person out of finance, two founders, co-founders, and they were raising money based on this slide deck for seed capital, so raising early stage money for their new business venture. So here's how they presented the problem. We've talked about the importance of framing the problem as clearly as possible. And I think this is particularly effective. So across from left to right, the US population of non-Mexican Hispanics, 19 million people. US population of Hispanics with annual income in excess of 100,000 a year, 7 million people. US millennials who cook new or regional ethnic foods, 80% of that population. So again, you can see how they're framing the market here and framing the scope and the size of the opportunity. And then the last column on the right, the number of quality organic Latin food brands that are non-Mexican, 0. So if you look at that progression from left to right, you get a sense of the size of the market and the competitive landscape in terms of the white space here that they're identifying. So big population, and then if you subdivide it, you can see that there's a high level of interest in this general category, but last column, again, very emphatic and effective. 0 companies by their analysis that are selling quality, organic Latin food brands. And again, quality, organic Latin food brands are the qualifiers here. We're not just talking about Latin food. We're not just talking about organic Latin food. We're talking about quality, high quality, organic Latin food brands. And as we move further through the deck, you'll see how they line up the competition against what they have to offer. So they are asking the question, given this matrix here, this opportunity, how can they, these founders, make sure that these foods and flavors thrive for generations on behalf of our families and everyone else's? So it's a very interesting tonality here. What they're saying, they're bringing this back to their personal experience and their families, and then expand the lens to everyone else that fits in this category that has this tradition of food in their family background. So what's the solution? We saw the problem. How are they identifying the solution? They want to create a multi-line, so multi-product brand of organic spices and foods based on traditional Latin flavors. So we saw in the last slide in the problem that there were 0 brands in this category, in this corner of the category, and they want to create a multi-line brand that addresses this corner of the category. They want to develop convenient packaging formats and new distribution channels. So that's a way of getting the product to market and getting consumers to be familiar with it and to want to adopt it. They want to leverage the social media community of modern Latino millennials. So they have a very specific idea of how they're going to promote the brand and develop brand identity and awareness within their target market. And then they talk about the complementary skill sets of the founders and why their match, their combination is ideal for this company. So one comes out of the marketing space and technology. And he's a brand developer who has used data to promote brands in the food space generally. And the other is a member of a grocery store chain of 15 grocery stores owned by his family, multi-generational family who's owned these stores in the greater New York City market. So they're making the point that they have the tech chops, and the experience set and the connections in food to get this product launched together. The next slide is about their products, and I didn't go into any of the detail here because some of it may be confidential, but they're identifying the characteristics of the market, of the products that would differentiate these products in the market. They're high margin products. The flavor is going to be extraordinary. They are clear upgrades from the more traditional MSG filled food product options in this category, and they're using one company's products as an example. And they are using an innovative packaging format, which allows these products to be cooked fairly quickly for on-the-go families. They lay out the product information, they identify the attributes that distinguish it in one slide. Great snapshot. And again, we're telling the story very quickly here, very succinctly, without a lot of water in the presentation. Quick description of the two founders, a little bit about their background. It has to fit on one slide. Again, bullet points suffice. We're looking for headlines that'll be attention grabbing and persuade the investors quickly that you as a founder and your other founders and or team members have the experience and the skill set necessary to get this company launched. This is a really interesting slide, I think, about their competitive advantage, how they quickly identify the areas in which they are going to be able to compete very effectively against the existing competition. So in the upper left-hand corner, unique retail testbed opportunity. Here they're saying we're going to be using the 15 grocery stores that one of the founders' family owned to test this on the retail shelf. So they're not going to go out to Whole Foods right away or Safeway or any of the large retailers. They're going to pressure test this in these local family-owned grocery stores in the New York metro area to get a feel for how the product will move off the shelf and what's going to persuade the customer to try it. On the upper right-hand corner, connection to modern Latin culture. Their story, they are Latino founders. They have a personal connection to the product and the culture and the target market, so they're going to emphasize that as part of their competitive advantage. In the lower left-hand corner, again, this is their social media emphasis, where they know influencers, social media influencers, they know how to promote on social media, and they're going to develop a following for the product and the company on social media. And they're going to engage their network very actively, and that's how they're going to build their brand. And then the lower right-hand corner, they have complementary skill sets as founders, one in brand, the other in data. So they have a storyteller, they have somebody who understands the data science involved in building a market and a following. So unique combination of skill sets among the founders. And here in a snapshot, again, one slide, they are able to say, look, this is how we're going to be different from other people in our space or other people for our product and company and others who may follow us. These are a unique combination of skills and experience that will allow them to distinguish themselves in the market. Distribution channels, boom. How are we going to get the product out to market? Well, we're going to go direct to consumer in this case. So white label Amazon fulfillment, and they'll also sell directly from their website. So that's box 1 on the left. They're going to go to other online retailers. So Walmart, Amazon Prime, Jet, which is part of Walmart now. And they have a direct focus on that market or distribution channel as their second focus point. And then the third on the right is regional retailers, so specialty grocery. And there they're going to use the 15 markets that the family, one of the founders' families owns to get traction locally and to build out to specialty grocery regionally and then hopefully nationally. So a really clear picture here of how the product's going to get to market in different channels. So here they're explaining in this slide how they're going to promote brand adoption in their marketplace. And this is their marketing strategy in effect. So to the left, community building, they're going to build a community through social media with content and influencers, people who will follow this product and interact with each other as part of a consumer group that is going to adopt and support and hopefully promote this product to others. This is unique in terms of the community building approach, and we don't see that all that often, but this was particularly effective in their case. And so if there's an opportunity to think about that, you should think about building that into your pitch deck. In the middle column, events and partnerships, they're looking to set up events with marketing partners and other providers that are in this, that promote to this sector. So they're thinking very carefully and strategically about what kind of events and partnerships they can put together to introduce the brand to their target market. And then on the right-hand column, online advertising. This is a skill set that they have from their professional lives. So they're looking at ways that they're going to very tactically advertise the product on online platforms to build a following that way. Competition. Okay, this is, you'll want to take a little bit of time when you review this deck to really understand what they're doing here, because your approach is going to be a little bit different in terms, but the matrix is going to be the same. And basically, what this does, and I'll explain the categories they're looking at, is it's the upper right-hand quadrant here, which is their target market and their primary competition. So if you look at the arrow to the right, the companies on the right-hand vertical half of this slide are real/high quality products in this target market. If you look at the top arrow, so the top half of the slide horizontally are the most authentically Latin products. If you look at the bottom half of the vertical of the slide, you see the inauthentic products are kind of below the line there in terms of the horizontal line. The less authentic products, we'll call them. And on the left-hand side of the quadrants, you see the arrow to artificial low quality. So you see the continuum on the horizontal line between artificial low quality products all the way over to the other side of real high quality products. And then on the vertical line, the distinction between, or the continuum between authentically Latin products at the top half down to the bottom of what they're calling inauthentic products. So if you look at the lower left-hand quadrant here, you'll see what they consider to be the lower quality, less authentic products in this category. And you'll see the brands that they identify as falling into that quadrant. So that's not the competitive set they're looking at. Those are the products that they feel they will not be competing with because those are low quality, inauthentic Latin products. If you look at the upper right-hand quadrant, you'll see the products that they do consider their competition. And the names are a little unclear here, but it's not that important that you see the names. It's more important that you understand how this matrix is laid out. So those are the companies that they identify as being authentically Latin. This is the upper right-hand quadrant. Authentically Latin with real high quality, with real/high quality products. And those are the products they're going to be competing with. And you can see the upper left-hand column, those are authentically Latin products, but low quality. The bottom right-hand quadrant are higher quality products, but are less authentic. And you see the 365 brand from Whole Foods, the private label brand from Whole Foods as being one example there. So you can see how this lays out. And for sophisticated investors, they look at this and they say very quickly what the competitive landscape looks like, who the real competition is identified as, and who they're not trying to be, on the other hand, in the lower left-hand quadrant. So this one matrix tells a big story, and it requires a lot of thought and research to lay it out correctly and convincingly. This is a slide where they start getting into the financials here, and they look at 6 different products that they're going to be developing in the categories of seasoning, and then separately ready to heat rice. So 6 different products, and they're identifying what the price point is going to be, what the cost of goods sold is going to be, what the net is going to be, the difference between the two, the price point and the cost of producing and selling. That's the net. And then the gross margin, the bottom line, is the percentage of profit based on the top line price point. And you can see the gross margin for this product is kind of in the 60 to low 70% range. That's very good. You'll see that many food products are in the 30 to 40% gross margin range. This is a very healthy product margin. And they've made the point here that they think this is going to be a profitable business based on these metrics. Next slide talks about what they're going to be raising the money for and how much they're going to be raising. So they're talking about raising a convertible note, promissory note here, for $500,000, which will get them to what was going to be their Series A round in 2019, which did occur. So that was the first kind of priced equity round, the Series A, and this convertible note is a bridge financing to get them there. And then they identify what they're going to use the capital for. So marketing, to continue to test and learn about the market, to do some paid ads to test the effectiveness of their marketing strategy. They were going to develop content. Again, these are very experienced kind of brand builders, at least one of the 2 partners. So doing the brand storytelling and doing the e-commerce design and developing the content engine is very much part of their business model and also their skill set. So they're going to be using some of the funds to do that. Team building, acquiring talent, hiring people, essentially. And they're looking to focus primarily on sales management and marketing, sales development, and tracking, because again, this is a data-driven pair of founders. They want to make sure that they're tracking data in a compelling way. And manufacturing, again, being able to order more from a manufacturer or a co-packer should reduce the cost and therefore increase the profit margins for the company. And also increase the ability to do smaller runs to test and learn, smaller scale production runs, and having more money to do that gives them the ability to be a little bit more nimble in that process to test and learn. And finally, they're going to do more research and development to understand where the opportunity is to expand their product line based on their central marketing premise and demographic that they're targeting, and also to do community testing to see the response to their marketing and some of their product line extension ideas. So that's what they're going to use the money for. That's what they're going to raise in this round. The ask is $500,000. And you can see that this is, it holds together as a pretty compelling story. It's just maybe a dozen slides altogether 10 plus or minus. But in that short, concise, very specific, detailed presentation with no fluff and not a lot of water in the presentation, well, almost exclusively real, substantial content. They've made their case very quickly, and their presentation actually took a lot less time than my explanation of their presentation. But you can see how architecturally concise this is, and in how they've designed it to get the message across as cogently as possible. So that's the pitch deck they put together. Again, just to talk very briefly at the end here about the elevator pitch. Again, if you think about their idea, how would you reduce it? What's the reduction process to reduce it to a 30 to 45 or maybe 60-second pitch that they could and you will be making for your venture to prospective investors? What's the problem I'm solving? What's the solution to the problem I'm solving? You take those two factors and A plus B equals C, the elevator pitch. And again, if you can do it in 15 seconds, great. If the elevator ride to the 22nd floor takes 30 seconds, that's fine. Once you start going over 30 seconds, you start losing the attention span if you can't boil it down to that period of time. Some are 45, maybe 60 on 1 minute on the outside. But the sweet spot is 15 to 30 seconds, as specific and compelling a hook as you can set. And this requires practice, and it requires a lot of thought. And you'll take everything that precedes this in terms of the business plan and the pitch deck, and then we hope to boil it down to this. So you have this in your back pocket when you run into someone, wherever you may run into them, who might be a potential investor. That's it for today for Module 3, and we'll see you in a few weeks for the presentation for Module 4. Thanks, everyone.